Hey folks, it's Vic Noble here with your weekly trade example for the week ending May the 18th, 2012. For this week's trade example, I want to illustrate the power of learning price action first and foremost. Really important, and how learning price action can allow you to duplicate a successful method of trading. Now let me explain this. Today, which is Thursday, May the 17th in North America, on the Euro-US, this is the Euro-US dollar pair in front of us here. There's obviously a lot of negative stuff going on with the euro right now fundamentally, and if you don't really think that's true, then just take a look at this chart. I mean, it's like it's fallen off a cliff here. But ever since the beginning of May, that's May the 2nd right there, so down she goes. And so my trading bias with this pair has been to the short side. Now it doesn't mean that I won't take a long trade for a short-term day trade. I might, but the higher odds trade and the easier money is made by selling, as long as the technicals and the fundamentals remain as negative as they are. So you need to have a method to trade, and in our recurring forex patterns course, as an example, one of the patterns is this pattern number 6, otherwise known as the VIC trade. And this can be done with any pattern too. I'm just using this as an example here, and we watch for this trade every single day, because there are very few days where you don't get at least one of these setups, and usually there's several setups across different pairs. Well, today I'm watching the Euro-US dollar pair like any other day. And here's the thing. If a method of trading is truly duplicable, then other people should be able to learn it and get the same trade, or at least a similar trade. You never get the exact same results, but something similar. I mean, what good does it do if I teach a trading pattern to people, but nobody else can really do it? Not much use, right? So now, to be fair, trading is definitely not just black and white, but the VIC trade, I tell you what, it's a pretty darn objective trade setup, and very easy to learn. So here's what happened. Price comes down. I'm watching this level pretty closely, by the way, because if you zoom this out, that's support, and you know how I always watch support resistance levels. However, the fact is that my candle action on the 4-hour and the 1-hour charts, everything's telling me that the thing's still heading down. So I didn't know if it was going to go and break below this level or not. But all I knew is that I got a setup, and the VIC trade sets up on a 1-hour chart. And that's the chart that we key off of. And here's what happened. Price started to rally up, and I'm looking to sell on the way up here because of the conditions that were present that were made at a VIC trade. So this pattern number 6. And I'm going to go to a 15-minute chart because you can see it a little more clearly what I did here. So on the way up, the first place I sold, like if I zoom this out a little bit, see all this support in here? This is 127, the figure level, which is a pretty nice level to be looking to sell at. So what I did is I thought it would be a good level right here, and there was a pivot here and the Fibonacci number, so I sold it there, and look at it, just kept going up. And that's the thing about trading. You don't know. Don't let anybody ever tell you that, if this and this happens, then you're going to make money. That's ridiculous. You never know if you're going to make money. Every trade's uncertain, but you can know that you have a good odds trade and a good chance of making money. That's fair enough. But you don't know for sure. So that's where you have good risk management. Well, this trade went up. Didn't get stopped out, and it came back down in this red candle here, and I got the risk out of this trade, and I even dumped one of them down here, and I ended up getting stopped out on the remainder. So I averaged just under 11, like a 10.5 pip loss on that trade. So it goes up again. The conditions for a VIC trade are still valid, and this up here was another good level of support resistance, and I sold it again here. In fact, it was the daily central pivot right there as well. And look at this move down. On this move down, I picked up an average of almost 23 pips. It goes up again, so that's my second trade. It goes up again and hits this level. See this support resistance level? And the conditions off the hourly chart are still valid for a VIC trade. So I took it again up here, and this thing came down really hard this time, and I picked up another 30 pips on this. And these are all average per lot too, by the way, on the way down here. So now here's something that was really interesting. I was talking to Shirley Hudson about these stuff after these trades had happened, and we're talking about what trades we had and stuff like that today and anything, and I was telling her about these 3 trades on the euro. Can you believe that she had the exact same 3 trades? Almost, I mean, our trade entries and exits were almost to the pip. I mean, that's pretty crazy. So it was hard to even believe there's 3 trades in here, but it just shows you that this pattern is duplicable. We do the same thing. We teach it the same way too. On the US CAD pair today, we had the same thing. We got in at almost the very same price, and away it went straight up for a really nice move. I also got emails from other members who did the same thing. So I thought that was just great to see that they're able to learn it and duplicate it. So what I wanted to get across to you this week is that the first thing you really need to learn is to read what price action is telling you. Okay, that's everything. Indicators are secondary. Now, don't get me wrong, I do use some indicators, and that's fine. But I use them based on what price is telling me first and foremost. We have it in the coach's corner. Calvin Thornley, a fantastically good trader, uses indicators, but it's all based on price action. This guy makes like a sick amount of pips. It's really amazing. So when you learn what price action is telling you, then you can apply a pattern to that action. Okay, and if the pattern has valid setup parameters, then it should be duplicable. Other people should be able to learn it and get the same trades, or at least get similar results anyway. Okay, so don't just rely on a bunch of indicators for your trading. Learn to read price action first. Find a nice duplicable pattern, and you're on your way to some giving yourself a good chance of making some money in this business. Okay, so there you go. Thanks so much. Hope that helps you a little bit. And that was this was on the Euro US dollar pair today, and this is the weekly trade example for the week ending May the 18th, 2012. And I'll be back at the end of next week with another example for you. Thanks so much. Have a good weekend.